Welcome to Richard Suttmeyer's 4 in 4. 4 blips on my radar screen presented in 4 minutes or less. My first blip profiles the U.S. Treasury market and as the coupon curve steepens even more. The 30-year minus 2-year yield reached a new wide for the move at 239.5 basis points on Tuesday, primarily on a flight to quality into the 2-year note. My annual resistance for this spread is at 270.6 basis points. I forecast that the yield on the 30-year bond in mortgages will rise during the rest of 2008. The yield on the 30-year bond is between 4.50 and 4.25 after trading as low as 4.10 on January 23rd. It's all about supply and demand. The Federal Reserve has cut the federal funds rate by 125 basis points year to date, but the yield on the 30-year bond is down just 11 basis points. Rate cuts with elevated inflation, increased auction sizes to fund tax rebates, and raising the limits on GSE-conforming mortgage loans will cause bond yields to rise, coupled with tighter credit standards, and we will have wider spreads for mortgage-backed securities. My second blip tracks the volatility for COMEX gold and NYMEX crude oil and dollar stability. COMEX gold closed lower on both Monday and Tuesday, confirming the key reversal from last Friday. My monthly and quarterly pivots are 897.6 and 856.5, with this week's resistance at 941.1. NYMEX crude oil trades around my semi-annual and quarterly pivots at 88.04 and 88.85, with risk to my annual supports at 78.40 and 76.30. The slowing economy will be reducing demand for energy. The dollar remains resilient as weakness shifts to the euro and British pound. Annual support for the British pound is 1.9271, with my annual pivot at 105.86 for the dollar versus Japanese yen, and quarterly resistance at 1.5066 for the euro. My third blip shows the daily charts for the Dow and Dow Transports. For the Dow, weekly support is 12,009, I should say, with my annual pivot at 12,670. The daily chart is neutral, favoring a trading range. Longer term, the risk is to my annual support at 10,747. For the Dow Transports, monthly and annual supports are 43.71 and 42.67, with today's resistance at 48.24 and the 200-day simple moving average at 48.77. Note that the daily chart remains overbought. My fourth blip tracks the housing and regional banking indices. The Regional Housing Sector Index, HGX, is fractionally higher year to date after alleviating an extremely oversold condition. It's now overbought. At the low, HGX was down 18.4% year to date and trading at levels not seen since May 2003, before the housing bubble began to inflate. HGX is above its 50-day simple moving average at 138.08. The Regional Banking Index, BKX, is about break-even year to date, alleviating an extremely oversold condition, but it too is overbought. At the low, BKX was down 15.5% and trading at levels not seen since May 2003, before toxic subprime mortgages were originated. The BKX is just below its 50-day simple moving average at 89.15. I'll be focusing on the housing and financials as the speaker at the Bloomberg Technical Analysis Seminar Thursday afternoon at 5 p.m. Join Traders Club at Right Side Live this afternoon at 6 p.m. Send your comments and questions to support@rightsideadvisors.com. That's today's 4 in 4. Enjoy your day.